welcome to the Stock Market Morning Prep video for Wednesday, June 11th. Well, the market's paused yet again. We did have some green across the board. Dow Jones was up just about 3 points. S&P ended up closing down. The final reading was down 48 cents, but right around 4 o'clock, it was also up about 50 cents, and NASDAQ up $1.75. So very, very quiet. I think the markets are looking for some direction on can we move higher? What's the catalyst? Or do the markets sell off? I think personally now, this is not anything to do with technical analysis. Aside from that, just a matter of feel by looking at the markets all day, sitting in front of the screens. I think the markets are headed for a big move, and I still think the markets are headed lower. At least we're going to get that 5% correction at the very least, which I think is in dire straits of more like a 15% correction if you really want to get a good, healthy market going into the end of the year. Because this is total nonsense, 13, 14 straight days, straight up, markets refuse to sell off. What happens is when the time does come, and nobody knows when we have a risk-off type of event or a catalyst to move markets lower, it's going to be fast and furious to the downside. And it's going to be scary for a lot of people. And that's silly because it really doesn't have to be that way. But with the Federal Reserve continually pump liquidity into the markets, and yes, they are tapering 10 billion, but it means absolutely nothing. 10 billion is a very small number. But they continue to support QE, continue to support markets when clearly the markets are in need for some sort of a rest. We have markets that have been up all of 2013, just about all of 2014 with this a silly price movement to the upside. And as I mentioned, the markets are on a sugar rush, and there's no question about it. Sugar high. It's absolutely ridiculous. And then when you're looking at price action during the day, you get your first move, you wait your first 15-minute opening range breakout, markets move up for the first 45 minutes, you look for a pullback, and the markets stay stagnant pretty much most of the day with a selective handful of stocks that are moving within the index and or the sector. So it's crazy price action, but that's what we're dealt with as traders, and we have to deal with that. And what is that? What do I always say? Patience, patience. Sit on your hands. Look for the best setups. If you have one or two trades, you get stopped out. You don't have to just continually trade. The markets are very difficult right now for especially new traders, and it's important to understand that and realize it. When the markets are easy, it's very easy to make money. That's when you step up leverage. That's when you step up your share size. Right now, you shouldn't be doing any of the two. You should be sitting back and yes, take some trades. Obviously, there's nothing wrong with trying to make some money, obviously, but we'd want to do it when the time is right and we have the probability on our side. And right now, with the markets just grinding higher, and mostly the indexes are, and a lot of stocks are just, you get that one move in the morning and then you get that sideways consolidation pretty much most of the day. So look for the best quality setups. That's the best thing I can do as far as recommend in this type of market at the moment. So let's run into the indexes. And as you know, I know it is a little boring, but I just want to run through that. We are overbought here. I did show you the momentum, the bar chart momentum index yesterday, which showed again we were up at the upper end of the 101 range, which we're looking for some sort of a pullback today, and we'll see if we get it. We are at extensions again, 1618. We've been up here for 3 days. It is bullish though when it kind of just hovers the 1618 extension, but I'm looking for a pullback at least to the 20-day moving average, if not the 50. Get back to that 1900 range and then see where we go from there. I would really prefer a downside correction to make things much easier, and stocks would be stronger ending year end on a real good positive note here. But again, you have all this light volume. I don't want to repeat myself, but we're extended. We're extremely overbought here, and it is looking for some sort of an excuse to sell the market. And I'm looking for at least that 1916 area, and then I reevaluate it. But if we break the 1916, obviously that 50-day moving average coincides nicely with that uptrend line here at 1900. Take a look at the diamonds. I did put some Fibonacci extensions on some of the indexes from low to high. Did a 1272, which we already broke out of, and now we are looking for that 1618 extension if the markets decide that that's where it wants to go. So Again, one step at a time. Let's keep an eye on it. But we're at these extensions on all of the indexes. Transports, IYT. I'm looking for a good, healthy pullback, at least to the minimal of the 20, if not that 34, and then the 50 down below, and then of course that lower trend line support. But I'm looking for a decent correction here. We're at the upper end of that trend line. We have now gone up almost 14, 12 out of the 14 trading days. And we were a little soft the last couple of days, but let's see if we break out. And if we do break out of here, I'm going to be looking for an area where if the market does reverse and gets back into the channel, looking to short the transports. And if we look at the IWMs, we took Fibonacci retracements here, and we've now taken out the 61.8% retracement. And usually when that happens, these are the two areas that it's going to need to hold, right? Here's your golden ratio, that's 61.8%. But if it starts to break back above it here, then you're going to look for a challenge of the highs, and then, of course, that 1272 extension of 124.22. And if you don't think that it can get there, think again. The market's a little crazy. And with no volume in the marketplace, moves tend to be exaggerated to the upside and to the downside. So just keep that in mind, okay? And then just looking at the Qs, lastly is the Qs. Same thing. We took out the, did a Fibonacci retracements. We took out the highs here, and now we're just underneath that extension of 93.53. And I think that if the Qs can muster up another move, I think it'll hit that 1272 extension. So you can see we are either at or near extensions. ES is at the second extension of the 1618, all pointing to at least a break, a rest, and some sort of a pullback. And if we do get a correction, what type of correction, who knows? No one knows until the correction has begun, and we could put in a local top somewhere. So, and again, we also need a catalyst. Remember that. If we don't have a catalyst, markets will just drift back and forth, pull back a little bit, and then pop back up again. Because the path of least resistance with low volume is always to the upside. Just keep that in mind. Right, guys, I hope it helps. Have a great day, and we shall speak to you tomorrow. Take care.